We are covering these 8 top stocks with big percentage gains today. Our review on MMA. Mixed Martial Arts Group Limited, a tech-driven company deeply embedded in the combat sports world, operates through 4 core businesses, from gym management tools and mobile monetization platforms to fan engagement and community-building media. Whether it's their TrainAlta platform helping gyms grow, or mixedmartialarts.com keeping fans in the loop, they're aiming to be the go-to ecosystem for everyone in martial arts. Now, here's what just dropped, and it's got investors buzzing. On April 7th, MMA secured a $2 million revolving loan that's non-dilutive, unsecured, and not convertible, meaning no shareholder dilution, no equity being handed over, and no surprise warrants. This is a clean, flexible financing deal that gives them some breathing room. It's from a family office through a promissory note, with a 14% interest rate and a 12-month term. That's not cheap, but in today's environment, non-dilutive cash at this stage of growth? It's a strong show of confidence from an outside investor. The big kicker, though, is what happened next. Massive board changes. 2 directors out, 3 new ones in. Hugh Williams and Jonathan Hart stepped down, while Richard Proloni, Eric Corbett, and Angel Liriano are stepping into leadership roles. That kind of shuffle usually signals a shift in strategic focus or an effort to bring in new perspectives, especially if the new directors bring capital markets or operational experience. And then the stock popped hard. MMA surged over 90% intraday, with more than 50 million shares traded and a huge 165% breakout right at the open. It's cooled off a bit since then, but that kind of volume and movement says one thing. This isn't just retail buzz, there's serious speculative energy circling. So, what's the takeaway here? MMA just gave itself some capital runway without diluting shareholders. That lets them double down on growth. Maybe expand TrainAlta, scale hype, or push global adoption of BJJ Link. And with new board members in place, the market's clearly betting on new leadership to unlock value faster. But the sharp spike and pullback in the stock price? That's typical of early-stage, thin-float names catching news. Traders rushed in, but the real test will be whether this funding actually translates to meaningful business progress in the next few quarters. It's early innings, but the playbook's starting to come together. Our review on PRTG. Portage Biotech Inc. is a clinical-stage immuno-oncology company focused on reprogramming the immune system to deliver more durable cancer treatments. Their pipeline spans 4 platforms, including standout programs targeting the adenosine pathway and iNKT cell engagement. Out of 9 product candidates, 4 are already in the clinic. So they're not just a science project, they're actively testing in patients and pushing forward. Now let's get into the fireworks from today, because this one caught serious attention. Portage came out swinging this morning with a 70% breakout near the open that triggered multiple trading halts. Momentum didn't stop there. A second 70% surge later in the session pushed the stock all the way to an intraday high of $13.11, marking a massive move from its previous levels. Over 31 million shares changed hands, which is wild volume for this name, and while the stock did give back some gains into the close, that kind of price action tends to leave a mark. What's wild is this move happened without a press release, no trial update, no official deal news. Which means the market is either front-running something, or there's chatter swirling behind the scenes. For a company with a pipeline this loaded, and in a red-hot sector like immuno-oncology, sometimes that's all it takes to light the fuse. This wasn't just organic drift, it was a high-energy, technical breakout, with low float and momentum traders jumping all over it. Add in some short covering, and you've got the perfect setup for back-to-back surges like we saw today. The question now is, was this just a flash, or are we seeing the early stages of a longer-term re-rating? That second breakout to $13.11 shows there's real appetite here, but as always with these kinds of moves, it's what happens next, like trial data or a new partnership, that'll determine how much of today's hype turns into lasting value. Our review on WTO. UTime Ltd is a mobile tech company that designs, manufactures, and sells phones, accessories, and provides OEM/ODM services for other brands. They're active in emerging markets like South America, South Asia, Southeast Asia, and Africa. So while they're not a big name here, they've got reach where mobile demand is still growing. Today's action? Pretty wild. The stock was quiet most of the day, then ripped 65% into the close, finishing up 61% with 1.19 million shares traded. That late move felt like a momentum breakout, maybe algo-driven or traders chasing a low-float pop. But with no clear news behind it, it raised some eyebrows. And right after the bell? The stock gave back 22% in after hours, which tells you the move was likely speculative. No PR, no earnings, no big deal announcement, just a late session surge and a quick cool down. For now, it looks like a technical spike, not a fundamental shift. But if news shows up to back it, this thing could get interesting. Until then, it's a watchlist name with high volatility vibes. Our review on BFRG. Bullfrog AI Holdings Incorporated is a technology-enabled drug development company that's bringing artificial intelligence right into the heart of biotech. Their platform, BFLeap, uses advanced machine learning to analyze massive, complex preclinical and clinical datasets, basically helping researchers spot patterns that might otherwise go unnoticed. Think of it like a supercharged data lens that can potentially accelerate how we understand disease and how we treat it. On the therapeutic side, they've got programs targeting tough-to-treat conditions like glioblastoma and liver diseases, using approaches like siRNA and repositioned drugs like mebendazole. And today, Bullfrog made some serious noise. The stock climbed 48% with over 13 million shares traded, and it wasn't a one-and-done rocket. This was a steady, consistent uptrend throughout the day, with a few pop-and-drop moments that showed traders were both testing levels and reloading on dips. That kind of rhythm usually signals a mix of momentum traders and maybe even some institutional interest peeking in. What's interesting is, there wasn't a big news headline out today. No clinical update, no press release, at least not yet. So, this kind of move feels like a combination of technical breakout and theme momentum, especially with AI and biotech being such a hot narrative right now. Bullfrog's whole value proposition lives in that sweet spot where cutting-edge tech meets complex disease treatment, and sometimes that story alone is enough to send traders piling in. If we get actual news behind this, say a partnership, trial progress, or AI-related validation, this could turn into something more than just a one-day spike. But even without it, the chart alone is now in play, and with this volume, people will be watching. Bottom line, Bullfrog's move today was sharp, energetic, and right in line with the type of speculative attention AI biotech hybrids have been getting lately. If the story develops further, it could stick around for more than just a headline day. Our review on CVM. CEL-SCI Corporation is a late-stage biotech player with a focus on immunotherapy, basically using the body's own immune system to fight cancer and other tough diseases. Their lead candidate is Multikine, a first-line cancer treatment designed to activate the immune response before the tumor gets too strong. They've also got their LEAPS platform, which is aimed at teaching the immune system how to better respond to all kinds of threats, whether it's infections, autoimmune issues, or even transplant rejection. Now, today's action? CEL-SCI had a really clean move, up 45% with 7 million shares traded, and it wasn't just a quick pop. This was a steady climb throughout the day, the kind of chart that gets traders leaning in, not jumping out. That slow and strong upward pressure usually suggests there's more than just hype. It might be early positioning or just the technical setup aligning with the broader interest in immunotherapy names. And here's the kicker. No major news hit the wires today. Which means this move could be a setup ahead of something. Maybe traders are speculating on clinical updates, a partnership, or just rotating back into beaten-down biotechs with solid late-stage assets. Or maybe it's Multikine getting renewed attention in the cancer space, where first-line therapies are gaining more focus again. Either way, the volume and price action say interest is back, and with a late-stage pipeline in a hot sector like immuno-oncology, CEL-SCI is one of those names that can go from quiet to explosive real quick when the right catalyst hits. So for now, it's a strong technical day without a news driver, but the steady buying pressure and that 45% jump definitely make it one to watch. Our review on STSS. Sharps Technology Incorporated is a tiny medical device and pharmaceutical packaging company focused on smart safety syringes, stuff like their Securguard and Soliguard lines, which are all about preventing needle stick injuries, cutting down on wasted medicine, and making sure syringes can't be reused. It's a niche space, but an important one, especially with growing focus on healthcare safety and injectable treatments. They've got a facility in Hungary and have plans to expand U.S. manufacturing, so they're thinking globally despite being a microcap. Now, the stock today? Absolutely bonkers. Sharps kicked off the day with a 45% breakout right at the pre-market open, and it only got crazier from there, up 46% by the end of regular trading with an eye-popping 653 million shares traded. Keep in mind, the market cap is only around $400,000, so yeah, that's the kind of volume that grabs attention fast. The price action was super choppy, with wild swings up and down, the kind of day traders love and long-term holders definitely don't. There wasn't any fresh news tied to today's move, which makes it feel like pure momentum, probably sparked by the low-float, high-volatility combo that gets retail traders swarming. It had all the signs: a big pre-market spike, multiple push-pull runs during the day, and volume that just didn't quit. So for investors, here's the real talk. The company's product and mission are solid, especially if they can land some contracts or partnerships. But today's run was clearly more about speculation and technical fireworks than fundamentals. If they follow this up with meaningful news, it could get interesting. Otherwise, it's a classic case of fun while it lasted for the fast money crowd. Our review on DRIO. DarioHealth Corporation is a digital therapeutics company playing at the crossroads of healthcare, tech, and behavioral science. They're not making pills or hospital equipment. They're creating smart, app-driven solutions to help people manage chronic conditions like diabetes, high blood pressure, and even behavioral health. Their platform brings together data, one-on-one coaching, and personalized interventions, which makes it more than just a gadget. It's a full-on support system in your pocket. You've probably seen their pocket-sized glucose monitor or their blood pressure system, all tied into their cloud-based Dario app that tracks and manages everything in one place. Now let's talk about today's move. DarioHealth jumped 30%, and this wasn't just a casual bump. That kind of gain definitely turned some heads, especially since we didn't get a major headline or press release driving the move. It felt more like a momentum shift, possibly a mix of technical breakout and renewed investor interest in the digital health space. This kind of price action usually signals that something's brewing under the surface. Maybe traders are speculating on upcoming news, or there's just a rotation back into lower-float digital health plays after a quiet stretch. Dario's been laying relatively low for a while, but their space, chronic condition management through tech, is back in the spotlight as healthcare systems push more toward remote, personalized care. So, while today's jump didn't come with a press release, it did come with some buzz. Whether it's just a technical bounce or a setup ahead of something bigger, it definitely brought DarioHealth back onto investors' radar. And if they follow this up with fresh partnerships, contract wins, or positive trial data, that 30% move might just be the opening act. Our review on TNMG. TNL Mediagene is a digital tech and media company that's doing way more than just running websites. They've built a whole ecosystem around content, data, AI, and media brands that span everything from news and business to lifestyle, tech, and even sports. You've probably seen names like The News Lens, iCook, Gizmodo Japan, or Business Insider Japan, all part of their portfolio. They're operating mostly out of Taiwan and Japan, and they've been gradually growing into a tech-first media force. Now, today's move, shares popped 27% on some very solid momentum after the company dropped a bullish update. They just announced that revenue grew over 30% in 2024, and it wasn't just a fluke. They're seeing strong traction across their tech and data-driven products, which tells us the business model is really starting to click. What's even more interesting is they're inching toward operational profitability, even after some heavy costs tied to their de-SPAC and IPO efforts. That's no small feat in this market. Heading into 2025, they're doubling down on using AI and big data to go after more ad dollars, specifically retail media and brand performance advertising. Think smarter monetization across their platforms and improved efficiency behind the scenes. They also mentioned ramping up multilingual content and building out content commerce, which is a big deal in the current media landscape. So, today's 27% surge with over 1 million shares traded feels like the market finally noticing what this small-cap media tech hybrid is cooking up. With a market cap around $15 million, it's still flying under the radar, but that might not last long if this kind of growth keeps showing up. Investors love a good revenue story, and TNL Mediagene just gave them one. Please subscribe, give the video a like, and watch more from our playlist. Thanks.